Hi, John Fitzgerald, and welcome to Team Custodian. My headline is Sydney Cycle, and I know I talk about it a lot, but realistically, that's the biggest moving number that we have. And when I say biggest moving number, we're seeing 1-2+ % price growth per month, but 84+% auction clearance rates, 980,000 average sale at auction, 214 suburbs of 600 now with $1 million median house price. They're massive moving numbers. But the big thing about Sydney, and I don't think people realise this, is that they have a massive shortage of supply of land. In fact, BizRacknell just came out this week saying it's 57,000 properties short, and that's going to increase to nearly 200,000 by 2030. One of the reasons for that was that between 2001 and 2011, Sydney was choked. It was choked by government who didn't bring enough blocks onto the market. That is, they had infrastructure charges that caused developers to basically shut down. The numbers were that in that 10-year period, around 5,000 blocks a year came on. 5,000. Sydney needs 15,000. So just that 10 years choked them by really nearly 100,000 blocks. They've made up a little bit of ground, but not much. They're still short about 57,000 blocks of land. And that's why you're seeing massive price growth, or one of the reasons. But the other reason is that we've got this cycle happening again and low interest rates. I'm out of Sydney. Custodian bought around 400 properties in Sydney. We paid around 445,000. They're now valuing at 750. Some as high as 950. Pemmill Way, which is a fantastic estate we did, 30 k's just outside of the CBD. Now those houses are $950,000. We sold them for $500 and something thousand. So massive growth in that area, but we're out of that Sydney market from a custodian perspective. Eyes on Brisbane. Now the data is interesting. The last cycle in Sydney, we had double-digit growth for 3-4 years before Brisbane began to kick in. And it was interesting because we saw Brisbane in 2000 jump by 7%, so there's a little bit of a spark in the market, but then 2001, Brisbane only went up by 3%. And to me, that was the calm before the storm. Because 2002, 16%, then 24%, then 30%. It just grew and grew and grew. And 2, 3, 4, those 3 years, the Brisbane market doubled in value. I'm seeing exactly the same. 2014, we saw about a 7% rise. 2015 is subdued, but it really is the calm before the storm. And just on Saturday last week, I was with the head of one of Australia's largest valuation companies, and he was telling me about there's so much, they've never seen so much activity going on, but still not the price growth. It's going to come, but it's going to come big, and Brisbane's one of the mass areas. Where's Melbourne? Melbourne's in between. So very exciting time, but yes, the main thing I've got to keep on talking about is those numbers in Sydney, and it's not a matter of where it's going to get to, it's a matter of how long it's going to run for. And my view is it's got at least another 2 years to run because of the shortage of supply and the fact that we have low interest rates. Thanks for listening to me.